Welcome back to Investing Talk Podcast.
Today we're looking at energy fuels.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Energy fuels is really interesting. It's sitting right at the intersection of two massive global shifts. Securing the nuclear fuel supply chain and building out a rare earth mineral supply chain that isn't dependent on China.
Okay, so it's a dual play.
It is.
Yep.
This duality, being a top U.S. uranium producer while also innovating in rare earths, that's really the core of the whole story here. You could almost call them like the American energy firewall.
I like that framing.
Yeah.
Because it's not just diversification. It's like a built-in hedge. If the uranium market slows down for a bit, the rare earth side can pick up the slack.
Exactly. So let's unpack that uranium piece first.
Right. When we talk uranium, Energy Fuels they are the dominant domestic supplier in the U.S.
That's right. And that's becoming more and more important. With all the geopolitical uncertainty, having your supply chain close to home isn't just nice, it's a national priority.
And their White Mesa mill is central to that.
It's everything. It's the only conventional uranium mill operating in the U.S. right now. That one facility is key to the entire idea of U.S. energy independence, making them, kind of indispensable.
So that's a pretty deep strategic moat. But the really compelling part of this story for me is the aggressive push into rare earths. It's a whole different ballgame.
A completely different vertical. And they're not just dipping a toe in. They're pioneering a new approach, focusing on pilot production for heavy rare earth oxides. We're talking about things like dysprosium and terbium.
And just to be clear, these aren't just random elements. They are critical for high-performance magnets, right?
Absolutely vital. You need them for EV motors, for wind turbines, for advanced defense systems. You just can't build a modern high-power electric motor without them.
Which is a massive market to tap into. It creates this whole secondary revenue stream that has nothing to do with the nuclear market.
And they can do it because their core business is so cost-effective. We've seen their weighted average cost for finished uranium, the euro, running around $53 a pound.
$53 a pound. So what does that tell us? How good is that?
It's highly competitive. It highlights just how efficient they are. I mean, a lot of smaller operators, their all-in costs are way above that, maybe $65, $70.
So this low cost gives them profitability and resilience, even if prices dip a little.
Yes. It positions them perfectly to ramp up production when they get the right contracts.
Okay, that makes sense. So that foundation gives them a lot of resilience. But let's talk about the money.
Yeah.
For a company trying to expand into a whole new field, cash is everything. How's the balance sheet?
The balance sheet looks exceptionally strong. It gives them a ton of flexibility. As of November 2025, they had working capital of nearly $1 billion.
$1 billion. That's a huge war chest.
It is. And it means they can fund all this development for both uranium and rare earths without having to constantly go back to the market and dilute their shareholders.
And didn't they do a pretty smart debt deal recently?
They did, a convertible senior note. But what was really smart is how they structured it. They set the conversion price way higher than the current stock price.
Which is a big positive for current shareholders.
Huge. It means the stock has to run up a lot before those notes turn into new shares, so it protects from that immediate, painful dilution. It shows some really prudent financial management.
Okay, so they have the capital. But this leads to the most complex part of the story, which is revenue. The trailing 12 months looked pretty robust, like $78 million, driven by uranium sales. But analysts seem to think the next year is going to be a bit challenging.
Right, and this is where timing is everything. That trailing revenue was strong, yeah, but the analyst consensus is expecting a pretty sharp year-over-year revenue drop in 2025, almost 40%.
A 40% decline is a big number. Is the market worried the rare earths aren't coming online fast enough, or is this just, an inventory thing?
It's overwhelmingly a timing and cyclical thing. Nuclear fuel production is lumpy. It's all about long-term contracts and delivery schedules. Energy Fuels is basically managing its inventory, holding back a bit to sell into future, higher-priced contracts.
Okay, so it's a strategic move. They're playing the long game.
It's a classic trough moment for a company that's retooling and ramping up two major operations at the same time.
So you have to look through the trough, because the rebound story is what matters. Analysts are expecting a massive, 85% revenue surge in 2026?
An 85% surge. That's the market pricing in both higher uranium volumes and the first real contributions from the rare earth business finally hitting the books.
And the losses narrow dramatically, too. The projected EPS loss for 2026 is just like 6 cents.
Exactly. It looks like a textbook trough-to-peak story playing out over the next 18 to 24 months. That's why Wall Street is still so bullish, even with the short-term bumps.
And you see that in the price targets. There's a huge range from 1325 up to a street high of 2750.
That wide range reflects the execution risk, sure, but the high end of that range is basically pricing in a scenario where everything goes right.
Okay, let's shift gears. What about recent corporate activity? Any changes in the boardroom?
We did see a key change. Director Robert Kirkwood resigned effective mid-October. A board change can always signal a shift in priorities. We'll have to watch who they bring in to fill that spot.
Interesting. And what about insider trading? We always like to keep an eye on what management is doing with their own shares.
Well, we have seen some Form 4 filings showing some insider selling and repositioning.
Okay.
Now, they often say these are planned sales for diversification, but it's something you have to monitor.
But, and this is a big but, that's completely counterbalanced by what the big institutions are doing, right?
It's the defining contrast here. We saw a major institutional stake change disclosed in late October on a Schedule 13G. That means a big passive fund took a position over 5%.
So while some insiders might be trimming, the big money is moving in.
The big money is moving in. They're looking right past the short-term noise and buying into that 2026-2027 rebound story. They're buying for long-term sector dominance.
That's a powerful vote of confidence. So looking forward, what are the key catalysts we should be watching for over the next, say, 3 months?
The first big one is the Q4 earnings release. That'll be in January or February of 2026. The market is expecting to see substantial year-over-year growth in uranium production. A beat there could really move the stock.
And on the rare earth side?
That's absolutely critical. We need to watch for announcements about initial shipments, specifically for terbium. That should happen by the end of 2025. It's not just about the money. It's about proving the technology works at a commercial scale.
Right, validation.
It opens the door to that whole new high-margin business.
And what about things outside the company's direct control? Market-driven stuff.
You have to watch the ETF rebalancing in December. Energy Fuels is in a few big energy and materials funds. Forced buying or selling from that can cause some short-term price dislocations.
A good opportunity for technical traders. And after that?
Then in January and February, we get the institutional 13F filings. That's when we'll see which other big funds have been building positions. It gives you a really clear picture of where the smart money is going.
Okay, so a busy few months ahead. Let's look at the technicals. How does the chart look right now?
Technically, the stock is in a long-term bullish structure. It keeps making higher lows. And importantly, it's trading well above its 200-day moving average, which is sort of the line in the sand for long-term health.
Why is that 200-day so important?
Staying above it just signals that the market believes the fundamental story is intact. Regardless of any short-term noise, it confirms the uptrend.
So what's the near-term trading channel we should be watching?
I'd say you're looking at solid support around $12, with resistance up around $18. The stock is at about $13.21 right now, so there's significant room to run up to that $18 level if we get good news.
And what about momentum? Is it overbought?
Not at all. The RSI, the Relative Strength Index, is down around 33.58. Anything below 70 is not considered overbought, so to be in the 30s, it suggests there's a lot of room for upside momentum to build. It's not a crowded trade.
All right, now for the fun part, speculation. There's always market chatter around a company like this. What are the big rumors?
There are really three main ones. First, a potential strategic partnership on the rare earth side. Maybe a big offtake deal with an EV maker or a magnet producer. That would instantly de-risk the whole project.
That would be a game changer. What about government help?
The second rumor is a major U.S. government contract or grant. Given the focus on domestic supply chains, it seems very plausible. They're perfectly positioned for it. And word like that would send the stock flying.
And the last one, the one that always follows these kinds of companies.
M&A interest. There are always unconfirmed reports that a much larger energy or resource company is sniffing around. As the sector consolidates, Energy Fuels becomes a very, very attractive target. The M&A premium could be huge.
So, to wrap this all up, you've got a company with a great balance sheet, a unique dual business model, and it's sitting in a bit of a cyclical trough. but with a whole slate of catalysts coming up in the next 3 months.
That's it, exactly. Energy fuels is a story of structural multi-year growth. It's being driven by these powerful tailwinds in nuclear energy and critical minerals. And right now, that big picture story is just overpowering the short-term revenue volatility. It's a really attractive setup.
If you want to keep up with companies positioned for multi-year growth and policy tailwinds, make sure you hit that subscribe button.